House hacking, is it dead or alive in 2026? Well, what is house hacking? For those of you that don't know what that means, that could mean buying a house with 3 or 4 bedrooms, renting the bedrooms out to your friends, having them pay your mortgage, and you live for free. And then maybe you reinvest the money you would have spent on a mortgage into another property, and then do it again and again and again. Is house hacking dead or alive?
Well, I think it depends on the definition. Is the definition that you live for free, or is the definition you live for less? Because if it's live for less, then it's alive. It's always alive. It's a great, right? You buy a house, you rent out 3 or 4 bedrooms or half the house if it's a split level or whatever the layout is. You can rent out rooms and live for way less, if not free. I'm not sure. I think it's gotten more difficult in a lot of markets to live for free. So but as a strategy, I think it's an amazing strategy for folks getting started.
For one, I think that it can be dead or alive. It depends on the market. It depends on the type of property. I don't think house hacking, ideal scenario, you live for free. A house hack, I look at my first property was a house hack. It was a 3-bedroom, 2-bath, single family home. I lived in 1 bedroom. I rented out the other 2. I didn't have free housing, but it covered about 2/3 of my mortgage, a little more than 2/3 of my mortgage. So this was in 2005. And at the time, renting out 2 of the rooms, living in 1 of the rooms, I lived for far less than I could have anywhere else in town, right? So to me, that was a house hack. I think, Travis, I think you converted a garage into a bedroom. I know people that have literally slept on a couch in their own home and rented out the other bedrooms. So I think those that want a house hack are especially like young investors and are willing to just kind of be scrappy. Those that are willing to put up a partition wall, sleep on a couch, take the smallest room. There's a huge opportunity in a lot of markets. There's also a low money down FHA loan for a lot of investors where you can buy 1 to 4 units. I think a 4-unit property is a great way to house hack. I think a 2-bedroom property would be a great way to house hack. You have a 4-unit property and you can live in the smallest unit and rent out the other 3 to cover all or most of your mortgage. The maths, you're winning. If you can buy a duplex and rent out one side and maybe live in 1 bedroom of the other side and rent those rooms out, that's house hacking. There's a lot of ways to house hack in that 1 to 4 unit. I've met people that have bought an apartment complex and lived in their first, lived in a small unit, their apartment complex. Like that's the ultimate house hack. There's a lot of ways to do it, but I think, being willing to be a little scrappy, being willing to have that early sacrifice of maybe a little bit less comfortable when you're young. And if you're willing to do that, it doesn't feel like a sacrifice, I don't think, because at the end of the day, you own the real estate. You purchased a piece of property that you can later convert into a rental property as you move. And then maybe you do it again, or maybe you buy your personal residence and that just becomes a long-term rental for you. But in 20...
I think it is a win because you probably, when you're in your early 20s, you're probably going to be renting a bedroom anyway. So might as well own the damn house of the bedroom you're living in. And I like that you mentioned there's different forms of house hack. I don't think there's one way to do it. We have a lot of people that we know that are building ADUs, accessory dwelling units, their mother-in-law's apartments. I don't know if you can say that anymore, but where you rent out maybe an apartment in your backyard.
Why can't you say mother-in-law unit?
I don't know. Everything offends everything. Everybody gets offended now. Maybe a mother-in-law's tend to be
offensive about a mother-in-law. I mean, my mother-in-law.
Well, I'm offended. So
well, I mean, we've all done it. Mitch, you did it. You bought the house you live in. You created an apartment downstairs, and that I think the thing that you got to be careful though, especially now with the cost of housing going up, is if someone rents out say 3 bedrooms and lives in 1, I would argue that and they want to move out and do it again. Are they going to rent out that 4th bedroom that they're living in, or are they going to turn into a single family rental? Because the cash flow fundamentals are a hell of a lot different when you're renting multiple bedrooms out as opposed to just 1 family in a house.
If you like what you're hearing so far and you are not making at least $120,000 a year with cash flow real estate or have millions of dollars in equity, come check out our 0 to 100 elite community. The link is below. Check it out.
It's interesting because we think about what it does for you in the short term. It either takes away the cost of living or greatly reduces that. But in the long term, my house hack has like, I took a line of equity on my house. And so on the initial house hack, and I've been able to buy multiple other properties with that line of equity, especially, and then pair that with raising capital. I mean, this one house has probably made me well over $1 million, not only the equity inside the house, but also utilizing the line of equity over time. But basically just a factor of holding the house and letting it appreciate and letting other people pay for it. So like, it's not just the house hack. It gets you into the game. It cuts your housing. And if you're able to do it while you're young, like you talked about, it's easier to live kind of scrappy when you're young. When you got a family, it's different. Like my house today, we have the whole house, right? But initially we rented out half of it because it's a larger home and I couldn't frankly afford it. And I want to invest that capital. So, but it's amazing that, it gets you in the game. Later on, you can tap equity, you can get into bigger properties. And that one first property can set the tone for the rest of your investing career, especially if you're young and you're, say you're in your 20s. $1,000 a month different delta is massively different when you compound that over good investments.
Oh, it's huge. I mean, most people's living costs, like their housing is their largest expense, right? And so, again, it goes back to like, are you willing to do that early on in your investing? And when I hear you guys talk or I listen to other people who've house hacked, it's the willingness to be creative. It doesn't matter if it's you're living in one room and renting out the other, or you're living on a cot or a couch and renting out all the rooms, whether it's a duplex, triplex, fourplex, you're living in the smallest, or maybe you're living in the biggest unit, but it's a 4-bedroom unit and you rent out, 3. I mean, I've met investors that started off living in a closet. It's like, are you willing to do the thing? And I think it doesn't matter if it's 2026 or 2006 or 1996. Like, are you willing to be creative? Are you willing to find a way to live for less? Like if housing is most people's biggest cost, if you can eliminate that or shrink that, it actually gives you freedom. And freedom is what we talk about real estate can do for you. And so the earlier that you can get that freedom, and the less you have to worry about your personal expenses, especially your living expense, the more time and energy and money that you have to go put other deals together, right? And so I think that's what it comes down to. Like, I've actually been surprised. I've met some young men and women and couples that are not willing to do that early on, and I've met those that are. And those that are willing to do that, like they're gonna succeed. They're like they make these small sacrifices that really don't even probably feel like sacrifices at the time. But then I talk to people, like I am blown away when I talk to someone in their 20s. They're like, yeah, I really don't want to, I really don't want a roommate. I really don't want to live.
Oh, boo,
Else. And I'm like, and I've talked to people in their 30s that say that too. And I'm like, well, you own no real estate. You have no wealth. Like you hate your job. You're talking about you want to invest in real estate and, have financial freedom and time freedom and cash flow and all these things. And you're not willing to share a room with someone for 2 years. Like, give me a fucking break. Like, and so it comes back to the conversation, not only like, how creative can you be? How bad do you actually want it? And are you willing to do the things it takes to get it? And then sometimes that's like a short-term sacrifice for a lifetime of gain, for a lifetime of freedom. And like, to me, I would trade that any day.
Well, like Gabe always says, quit being a little bitch. You can share the cabinets in the kitchen with somebody else if it means you can make millions of dollars in cash flow over time. I mean, you don't have to house hack and then rent it out. My first house hack, I think I was making $35,000 to $50,000 a year, and I bought it with a VA loan. So I put no money down. I rented out the rooms, like you said, walled off half that garage. What it allowed me to do, though, because I was dirt poor, it allowed me to own real estate, and it allowed me to hold that home for 5 years. And in 5 years, I was able to sell it and pull $50,000 or $60,000 out. There's no way I could have saved $50,000 to $60,000 in those 5 years on the income that I was making. And then I used that money to go buy another one, and then another one. Then I got into a duplex, and then I sold the duplex and did a 1031 exchange to buy our first mobile home park with Mitch. So we call that daisy chaining strategies in our book, and I think it's really important. But there's no way you can build that kind of equity that fast just by saving after-tax dollars and your shitty, low-paying W-2 job.
Well, I like this saying, and I think I made it up, so I'll take credit for it. But leverage or be leveraged. Right. but leverage or be leveraged. And the thing is I think the economic game is played in two ways. Most people play the game being leveraged all of their life. At the time when I was in my 20s, I was working for a company. So I was a cog in the wheel. I was an employee on the expense line, and I was being leveraged. I would go out and I would provide a certain amount of value to my employer, and they would sell that value to the end customer. At the time I was a project manager. Before that I worked for, an aviation company. It didn't matter what the thing was. Basically, they were taking my value and then marking it up and selling it to the customer. So they were leveraging me. Buying my first house hack allowed me to get on the right side of the leverage equation, right? It was my first parlay into like, oh my gosh, I'm actually leveraging other people. My tenants were paying for my life. They're paying for my home. They're paying for this home that's going to appreciate over time. They're paying down the debt. So it was the first time I got on the right side of the equation. And then what happened is, because I got on the right side of the equation, that house has helped me get on the right side of the equation in multiple other areas with multiple other properties. In fact, that one house hack I can give credit to probably 100 to 200 units somewhere in there. RV park, multiple apartment complexes, mobile home parks, because I was able to leverage that equity and go parlay that into more leverage on the right side of the equation. When you get enough leverage on the right side of the equation, there's no longer a need for you in your life to be leveraged.